Hey guys, so today I'm going to be covering Elf Beauty. Someone recommended this stock, so let's get right into it. Alright, so with these kinds of companies, for people that aren't aware, because they're smaller companies, they don't exactly have an analyst report, so it's a little harder to cover because they don't have like a revenue breakdown and things like that make it easier. But regardless, just to go over it briefly, it is a cosmetics company. Their main competitors, Sephora, Ulta Beauty. I think this is the most interesting part here, and just scan it over, where over half the company's sales come from its website, which doubles as a social networking site with over 2 million members. And it's kind of funny that they put that there because Ulta Beauty is trying to do the same thing. And I'm sure Sephora is going to try to do something similar, at least, or trying to. But I thought that was actually pretty interesting. So maybe I could see a potential future where Ulta takes over. They buy out Elf, or they beat them through competition. So a little hard to judge. And that's probably their biggest risk, is if they could beat the bigger companies like Sephora and like Ulta. So just going over their earnings, they beat earnings per share and revenue for Q1 2024. Everything looks great. I know that the CEO, because I looked up what he was saying, he thinks there's going to be market share, cosmetics, skincare. They're going to double market share in both. Probably going to take away market share from Ulta Beauty and Sephora. So I don't think it looks bad on that end. The growth aspect is just really the competition that I would be worried about. So we could check the finances, and they don't really have the best free cash flow, because in 2021 they had 23 million, 2022 they had 14 million, 2023 100 million, 2024 62 million, and then now it's 40 million. So they kind of super cyclical, as you could see. So I mean, I guess you could say it doubled in 5 years, but also it went to 100 and then it went back down to 40. So it's just the nature of the retail business. It's always cyclical. It depends on the consumer spending, things like that. So those trends are like harder to predict when it comes to these kinds of companies. All right, so we'll check my DCF on this. So right now, this is based off historical growth, and I believe that they're growing like 50% year over year, something crazy. And this is based off historical, so 53% undervalued. And then, but if you look at Wall Street forecast, it's 39% overvalued. And Tipranks, I think they're more or less, they're pretty bullish on it overall. 12 buys, 3 holds, 0 sells. So they have 60% upside. So they're coming in more in historicals, probably because it's a younger company. It IPO'd only a few years ago. So they think there's more room for growth. And it's an attractive price right now. It's at $104 a share, a low 161. So it's not, I wouldn't say it's a bad bet, but I would say that you would have to be cautious, because you just have to be aware that there is going to be fierce competition just from Sephora and Ulta Beauty, and amongst others, but those are really the two main competitors, obviously. So you just have to be careful with that. But, I don't think it's a bad company overall. All right, thank you.